This is Eric Mwatha with Mwatha.com. It is October the 12th, 2011. We are looking at a market here, which is up a strong 181% on the Dow. S&P 500 close to 1218 at the highs. Looks like the market is at the highs here. As a follow-up video to my primary lines video, now that we have, and this is now the S&P 500, we have about an hour and a half before the market closes right here. You can see that. Again, today being the October the 12th. What I wanted to share with you here is just what the market is looking like as we go into the 12:30 time frame. Market up 183. Now notice now that we are just about to clip on the downside the red line. So it would not be far-fetched to say that around here you might see the market having seen the highs for the day when the Dow was up about 189 points, just based on the fact that now as it moves higher, it's been hugging this red line, and as it hugs the red line on the upside, it moves higher. If it rolls over and clips the line, the primary line, which is this line here, if it clips the primary line like that, remember we are connecting this line here with this lows here, draw a straight line, and this is primary because we have a 52-week low right there. So we'll see how the market is going to respond in the last hour and a half into the close. So now we move to new highs for the day at 191. Let's see how we close into the final hour. Here's the Dow. As it screams to fresh highs for the day, up 193. So let's see, because now they're hugging the red line. Should they roll over and clip the red line, then we're going to see the market having picked, having seen the highs for the day. Also notice that, see whether I can get this right. Hold on. Also notice that there's a line here on the hourly chart which connects the lows over the last couple of days to the 52-week low. Should we see the market come and clip that, we're going to see a market come off its highs and probably have a strong sell-off whenever that happens. Now remember, as we push higher, sometimes, and it's very tricky because you don't know whether the market is playing a trick on you. It wants you to take the bait, and then it's going to roll over. So you got to always have to watch for that, because now as I look here on the, for example, if I take a look at the US call index as tracked by the Dow Jones, you'll see that it too has been hugging this line here, this line which connects it to, change the color here, which connects it to the lows over in the RSI on the hourly chart. So this line here that we are going to draw here now is a primary line because it's connecting us to a 52-week low, which means any break of this line on the price or on the RSI is going to lead to a strong move to the downside. Also, and remember that irrespective of where the Dow is trading, is you always have to be cautious here, because any pullback below that declining top lines on the RSI can be disastrous. Also notice that the same thing on the airline index. You'll notice that we've been bouncing off the lows here on the RSI there, and another low there. So we draw a straight line, which is a red line. Should we break below this line here, oops, take that off. Should we break below that line, the red line, then it's going to lead to a significant point drop, and that might explain why the market could sell off here in the going into tomorrow, or maybe even late in today's session. We'll see how we close, but I just wanted to point out here, I'm going to leave you here with the Dow at the highs for the day. Remember, we are just hugging on the downside, just hugging the support line on the RSI. Should we break that, I would guarantee you the market's going to come off its lows with a significant pullback, and that might also be short-term highs in the market. This is Eric Mwatha with Mwatha.com. Just wanted to do a follow-up video. Peace and blessings. We now see that the market has closed. It's probably about an hour after I made the video. Just continuing the video here. and you see now that we closed off the highs. The Dow was up 200 points. It's given back half of its gain. The Nasdaq was up about 45 points. It's given half its gains, and the S&P 500 has dropped a whole percentage point. And all this because we moved below critical, not critical really, but on the hourly charts we have that primary line. So as we broke down on the RSI there, on the hourly, of course that was going to be one that with a significant pullback. Now I don't know that this continues into tomorrow, but I'm just saying that for the sake, remember we are using hourly charts here, for the sake of understanding how markets behave, is this once this line was breached, we saw the market within 45 minutes or an hour or so give back half its gain for the day. We'll see how that's going to respond into, correlate with tomorrow's action, or how the market is going to respond now that we are breaking that trend line. Also notice that the Nasdaq, again, as based on this is now a 30-minute chart. The previous chart was a 60-minute chart. You see that we broke below the red line here with this break right there. Oops, let go. With this break right there of the red line, and that's good for half the gains for the day were lost. Also notice that we broke down on the right here, this line connecting these lows, that low straight line. Once we broke down there, again you see the market here ending the day off its highs with a significant pullback, given that it lost half its value, half its gains for the day. In other words, I'll just try and show you that primary lines are serious. Let's see whether this is going to roll over into tomorrow's action. This is Eric Mwathe with Mwathe.com. Peace and blessings.